scaled with ease, and the market is sort of virtually, back at all-time highs. The mid-cap index, in any case, has been at a record high. There are hardly any stocks in the red. There's just perhaps Asian Paints, Nestle, Eicher Motors, a tad bit soft, BPCL and HUL. But stripped of that, most stocks are trending in the green right now. In fact, in the last couple of days, many of these stocks, I was talking about auto stocks. Hero MotoCorp has come back in the last couple of days, actually. It's a 5% gain that Hero MotoCorp has seen in the last 4-5 trading sessions. Bajaj Auto, M&M, Tata Motors is your big mover. So autos are coming back in a big way and very good. Now it's a century hit by the Nifty, 100 points in the green, and the mid-cap index also strong.
Well, indeed, Sonia, a lot of big gainers in the broader markets as well. And, just to pull up a few names, high volume gainers out there, pre-call. The promoter entity going ahead, showing some faith, buying a couple of percentage points from the open market. That stock is up close to around 5.5% as we speak. HPL Power Systems as well, that's up close to around 5.5%. Peninsular Land as well, that one is higher in today's trading session. These are the top volume gainers today. And Graphite India, the stock is up yet another 1.5%. But just to give clarity that, the relief on the needle pet coke, that's not a raw material for Graphite India. It's actually for lithium-ion battery makers. So just keep that clarification in mind as well. You have Suzlon Energy that continues to move from strength to strength. That as well is up close to around 2% as we speak. On the losing end, well, a couple of names are coming for some profit taking. You had Vedanta. I think the stock opened up with a cut of around 1%, reacting to the JP Morgan downgrade. So that one is in focus. IRCTC, well, that's down close to around 1%. And AU Small Finance Bank as well is down close to around 1%. A solid start. Keep an eye out on the 18,670. That's a resistance level for the Nifty. For the time being, though, the SGX Nifty promised 90 points, and the Nifty is up a good 90 points. Prashant.
All right, well, you got the index now up 91, 92, 18,625. So it's a super start that we have on our hands. The top volume traded gainer this morning is HBL Power. The stock will come up on your screen. It's up about 7%, almost 120 rupees on HBL Power. Big one. Look at the volumes there. There is, I think, Rosari Biotech, which is up 5%. It's coming up with volumes. Olectra, I think we mentioned, with a 3% gain. There is Saxoft, which is up 5% volumes. Otherwise, I mean, you go down the list, are still picking up. Sangvi Movers, we spoke with the management earlier. It's at a new high, 470 now nearly on Sangvi Movers. Medanta is up another 3%. Stocks almost at 600. And Walchand Nagar was one of the movers from Friday. It's up another 4% this morning. I mean, some of these smaller companies like Paras Defense, Walchand Nagar, etc. were large gainers that we had on a Friday's session. What else? Zomato is down about 0.5%. Cyient is down 2%. Cyient, again, we were talking about the name with Prakash earlier. So it's coming up with large volumes. It's almost been a straight line move there on that one. Nykaa is under a little bit of pressure. It's a little pullback. Nykaa had a big day on Friday with gains. Vedanta, the downgrade coming through, Nigel explained that, 1.5% lower, 276, 277 on that one. Naukri's done very well recently. That's InfoEdge. That's down about 1%. And so on and so forth. IRCTC, AU Bank, IRCON. These are 0.5%, 0.75% cuts on the broader markets, basically. 85 points is what we have, 18,620. Manish Antalya is our market master of the day. He's head equities, PMS at Motilal Oswal Asset Management Company. Manish, good to have you with us here. Thank you very much for your time. It's looking good out there, right? In terms of general commentary, sentiment, flows have been pretty supportive fairly recently. In a way, is that also kind of the hurdle? I put out a piece on Friday based on EPFR data, which says that India is now a consensus overweight market for FPIs. So everyone is bullish, and that sometimes is also the hurdle. How do you think about that?
Yeah, so I think, the consensus trade today is that it's a buy on India. But broadly, markets are going to project what earnings are going to do. And I think for the year ended FY23, we ended with 807. That is 11% sort of a Nifty earnings growth. And for next year, it is going to be 15% growth, another 15% growth. So from that point of view, I think, there is fair valuation on the markets. Markets may consolidate a while. around these levels, notwithstanding the fact that everybody is bullish on India. Selected sectors are likely to do well. Some of the sectors which have not done well in the last 1.5 to 2 years are likely to outperform, and of course on the back of earnings growth only. So that's how it is. I think it's a bottom-up market. It's a pick and choose market, and it's not going to be a broad brush across the board. But I would think that markets are in for some degree of consolidation, pricing in pause rates in the US as well as in India on the.
Okay, so markets may consolidate around these levels, and this is a bottom-up stock pickers market. Got that. I want to talk about individual themes and what you're bullish on, Manish. But before that, in the next fortnight, there are a lot of central bank action that is coming through, whether it's the RBI policy this week, there's the US FOMC meeting mid-June. Are you expecting anything market moving? I mean, both banks are expected to pause this time around. But from a market standpoint, what would your view be?
Yeah, so 8th of June, RBI is likely to pause rates. Don't expect any hike or cut in rates on 8th of June. And obviously, there is a divided opinion on how the US Fed is going to shape up in, let's say, the June Federal Reserve meeting. And of course, out here also, the consensus seems to be building towards a pause. They've already hiked enough. Of course, oil, there has been now an oil cut by the Saudis, that's going to stoke some inflationary pressures. But I would think at this point in time, it's basically a pause. And from that point of view, I would believe that it's positive equity sentiments across the board. Risk on market is there across globally. So within that space, I would believe, India, which was an underweight market, should likely see some more flows. But broadly, the action is more in the mid and small caps rather than the large caps as a whole. Having said that, I think it's time that smart money takes over, the retail money in terms of the price action in the market.
Hi, Manish. Good morning. Manish, I wanted to focus on a couple of stocks, or you could speak to us on the sectors as well. The new age themes, I recall you were quite bullish on Zomato. That's played out quite well, right? I mean, that's worked in your favor. But on the flip side, you have Gland Pharma as well. I'm not sure, but I think you'll had some exposure out there. And obviously, you win some, you lose some. What's the outlook on both these two?
So pharma as a theme, I think I'm a contra buyer across the board. Having said that, yes, there has been disappointment in the earnings of Gland Pharma. But I would believe that it's a classic case of overstocking during COVID times in the previous 2 years. You saw some stupendous numbers come out of broadly all the pharma companies, including Gland. And then when the COVID has subsided, the excess capacity is leading to a lot of inventory in the system, leading to a lot of price competition, all of that, and you're seeing earnings degrowth. And the next cycle of restocking is again going to pick up from FY24 onwards. So from that point of view, valuations of almost all pharma companies are quite reasonable in the backdrop of cooling RM prices, the building blocks, the KSM prices, as well as action in terms of destocking, in terms of competition getting eliminated, so on and so forth. So for Gland Pharma, I would believe even after earnings cut, it is trading at some 12, 13 times FY25 numbers, and it's a classic injectables player, a lot of portfolio in the pipeline. All the negatives are priced in. So from that point of view, Gland Pharma remains a buy. And so is the case with mostly all the pharma companies, the domestic ones also. We have seen some classic listings also in that space. Plus, API prices, API exports, all the prices have seen the worst which they could have. So clearly, pharma as a space is the one to bet on. In terms of new age companies, yes, Zomato has worked. It's a part of our portfolio. And from that point of view, I think they have really fixed the profitability part of the metrics quite well. Growth is lagging. And I think, the next round of re-rating for the stock would come through once we see growth in the orders, And of course, given the way the management is guiding towards absolute profits come through, ex ESOP charges for the delivery business quite soon. And then Blinkit with its regular cash burn rate would also get factored in terms of how the profitability metrics for the Blinkit business going to shape up towards that 5% EBITDA mark. I think it's a multi-bagger stock. You continue to be quite overweight on this name, and also Paytm for that fact. And I think within the new age, these two new age companies, I think there's still some room on the upside.
Manish, power utilities, is that an overweight sector for you? Capacity over the last couple of years, new capacity has been practically non-existent, right? Power demand, if generally manufacturing, etc., is going to remain buoyant, should be pretty strong. And what are your thoughts and what are your picks if you like that space?
I think there's nothing very, exciting about the thermal part of the business, thermal generation. There's going to be some ordering that is going to come through this fiscal because, demand is really shooting through the roof. But the real excitement is basically in the renewable space. Of course, very few names out here, but really we want to play through the turbine generator part of the the power sector as a whole, rather than the utilities per se. And even not so excited about the financiers in the power financing space. We would be rather restricted to auxiliary power, or let's say standby power that is coming through in the form of generators or turbines or let's say engines, and companies which are really focused on alternate fuels, hydrogen for that matter. So yeah, that is how we did.
All right, got it. I just want to point out that the auto stocks are doing very well this morning. So you have Tata Motors, which is at a fresh 52-week high as we speak. It is the strongest performer in the auto space this year. It's a rally of 40% that Tata Motors has seen. And it's outperformed the BSE Auto Index, which is up just about 15% for the year. So big moves coming in there. It has M&M for company up about 1.5% and Bajaj Auto, etc., not too far behind. Manish, this is a space that has come into its own, right, after so many years of seeing a lull. Has an investor missed the bus here, or do you think there's more to go?
Yeah, some sort of a rally has already happened in some of these automobile names, but there's still some way to go on the upside, particularly the two-wheeler space, playing on the premiumization theme, and hopefully if monsoon is okay, then it's going to build up on that. And notwithstanding the CV space, which is really some way even from these levels to go before they catch up with the 2018-19 levels, which would make a fresh high. So another 2 years of rally in the CV space is par the course. Of course, it's going to be a soft year for, let's say, PV as a space, but within that, guys who are actually having an electric portfolio or an CNG portfolio, and within that space, obviously, Maruti is one of the players which is actually betting big on CNG. Two new models, Jimny and Front's actually coming through. I'm quite excited about the automobile space. We have an overweight stance on this, and not only the OE players, but even the the auto pump and the ancillary manufacturers.
All right, Manish, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. Have a good week ahead. The bulls are definitely having a strong week. We haven't given up on too much of our gains. The Nifty is still up about 80 odd points, and all the traction is in the banks and autos. So the rate sensitives, they started moving up, a couple of months ago rather, and now the rate sensitives are sort of ruling the roost. The bank Nifty is up to 65 points, and so is the case with a couple of others. Let's get you an exclusive conversation with the management of IGL. Now, Q4 was an operational miss for the company, but the volumes were up. And while EBITDA per SCM also came in line with estimates, they've given a guidance of FY24 EBITDA per SCM between 7.5 to 8 rupees. But let's find out what the overall trend is. Sanjay Kumar, the Managing Director at IGL, joins us now to talk about that. Mr. Kumar, good morning and thanks a lot for being with us on CNBC TV18. Wanted to start off by asking you how the demand has been so far in May and June, and how have the conversions been? The price cuts that you had undertaken after the gas price cuts, do you think that that has helped in any way in terms of boosting volumes or conversions?
Yeah, so good morning. Today is World Environment Day, and no better day than talk about gas, because in 1971, when this World Environment Day started, it's only now that we are learning the virtues of natural gas over the liquid fuels or coal. So coming to your question, when we reduce the price, our CNG and PNG volumes have picked up now. We are clocking more than 8.25 million cubic meter per day now. The prices have been reduced not only in the CNG and PNG, which we had done on in the first week of April, but also in industrial and commercial. And today we are having volume of about 1 million cubic meter per day in industrial and commercial.
Right.
Our all-time high was 1.2 million cubic meter per day, and we expect to touch that very soon. 1.2 million. This is about industrial and commercial. You know, out of the total sale, this is one portion which is related to market pricing of gas, not to the APM non-APM pricing of gas.
Okay. Mr. Kumar, we'll come back to some of these numbers in just a bit. Good morning, Prashant here. I just want to sort of ask you to respond to something which the markets and investors seem to be a little concerned about, which is the fact that the Delhi government recently has basically put out, draft rules, the Delhi Motor Vehicle Aggregator and Delivery Service Provider Scheme. This is basically what they want to do in terms of EV adoption for, vehicle fleets operated by aggregators and delivery service providers. So it's a pretty detailed set of draft which pushes EV adoption. Could you tell us, if this were to go through in the current form, what would be the impact? I'm sure you would have looked at the draft rules.
See, we are aware that the EV adoption is going to come up, but the analysis by the experts in this field has indicated that the hybrid model, which is supported by CNG, that may be the best solution for mobility in coming, decade. The EV would definitely come, but the infrastructure for charging, the feasibility of charging, the time taken in charging, all those issues will come up. Moreover, it will be limited to more affluent cities like Delhi and Bombay, etc. It is another matter that Delhi is our main market, and that is why we are trying to enter into EV field also. We are presently working on more than 50 charging stations and on some other initiatives also in EV. But you are right. If the rules are adopted like they are, it will impact the aggregators. They will decide to go towards EV more and more.
Could you tell us what percentage of the CNG volumes that you sell in Delhi come from, say, cab aggregators, Ola, Uber, etc.? How much comes from, DTC buses, Delhi Transport Corporation buses? I mean, the fleet. What is the percentage?
Out of the total gas that we sell, it's about 8 to 10% is taken by DTC, and about 12 to 15% is taken by Ola, Uber, etc. The taxi guys.
Okay, so about 25% of your volumes, overall volumes, comes from these two segments. So this is about 25% of volumes. Then, if these rules go through in Delhi, in a way, will be at risk. Am I correct in saying that?
Yes, the first statement that I made, that EVs are going to come, but we have new markets where we will compensate this volume loss if at all it comes in 4 or 5 years. The new markets are in hinterland, in the remote areas where EVs are, not so easily, cannot be adopted so easily. That is our current analysis, actually.
All right, Mr. Kumar, I think you mentioned that the volumes are up to 8.25, but you were guiding, I think, for around 9 MMS CMD, right, for the year. Do you see
for this financial year? Yes, for this financial year, you see the impact of lower market price of LNG has not yet seeped into the market. It's only now that impact is coming. So more and more industrial and commercial customers are likely to increase their gas intake, as well as there is a kind of set of customers who actually rely on LPG and fuel oil. So since the gas price is going down, they are also likely to come back to gas fold.
So you're maintaining that guidance of around 9, that you'll clock that for this year. And also on the EBITDA per unit, I think you were talking about 7.5 to 8. Do you hold on to that guidance? And Sonia had earlier asked you about the conversions. Well, could you give us a number? What are the conversions at?
No, so, the EBITDA in June also continues to be, slightly more than 7.5 rupees. The guidance that we had given was up to 8 rupees, and we are going to meet that. The conversion is presently more than 14,000, which, last quarter it was between 13 to 14,000. Now it is more than 14,000. More and more, the waiting list of CNG vehicles is increasing. It will translate into actual purchases. The data on Vahan portal actually takes some time to reflect the changes. It takes about 1 month to reflect the changes. We are very sure conversion rates would also go back to our earlier highs of 17, 18,000 very soon, in a quarter or so.
Okay, 17, 18,000, got that. Can you tell us how much has the gas cost increased after the unified gas pipeline tariff hike? And I think as per the calculations of analysts, it should be an increase of 1 to 1.5 rupees per SCM. Is that an accurate calculation, and will you be passing it on to customers?
See, this tariff increase for each entity would be different figure. For us, it's about 1 rupees 15 paisa, something like that. We have already factored that in when we reduced the price on, I think 9th of April was the date. These things were accounted for at that point of time. And even then, our EBITDA has increased in recent months.
Got it. We'll leave it there. Thank you very much for joining us. We'll touch base with you. I think, those rules in Delhi, I think they are to be notified by the end of this month, by June, and of course implemented over a period of time. We'll see if these go through like this. But material, 25% of overall volumes for IGL perhaps at some risk over the next few years because of these rules in Delhi. And of course, I mean, the bigger thing is going to be if other large markets start to adopt some of these rules as well. We'll take a quick break here. We'll have the management of CAMS joining us to talk about business for them. Later, we'll also be joined by Canfin Homes to talk about the business outlook. Stay tuned. Okay, welcome back. We're 72 points higher on the Nifty. 18,605, 18,606 or so is where we are at. Market breadth, by the way, is super strong. 3:1 is the NSE advanced decline ratio. So this is very much, once again, a market for broader markets, mid caps, small caps, strong outperformance last week, and that continues on the first day of this week as well. Now, let's speak with CAMS, the company in focus now. Motilal has got a buy. They got a price target of 2,600 rupees, and they're expecting their non-mutual fund business to actually grow in the next many years. Anuj Kumar is Managing Director, Chief Executive Officer at CAMS, and he's joining us right now to take some questions. Anuj, good to have you with us here. Good morning. Thanks very much. Prashant, this side. I want to start with, the latest in terms of proposed regulations by SEBI, and I'm referring to SEBI rules on total expense ratio. SEBI wants to, SEBI is saying to mutual funds, total should mean total. Nothing outside of the TER, everything should be within, although they are allowing the total expense ratio to go up a little bit as compared to the cap earlier. Could you tell us if this is, the feedback process for this has been extended? I think the last date for getting feedback is this year. If these rules, like how they've been proposed, were to go through, what is the impact for CAMS going to be in terms of profitability, sir?
Hey, morning, Prashant, and thanks for having me over on the show. So like the proposed new regulations are now open for public feedback. The last date is within the week for public feedback to come in. Essentially, it works the way you're talking about from what I would say reasonably well benchmarked in terms of global positioning that the Indian mutual fund charges represent to the consumer. The proposal is to bring in elements like, brokerage paid on trading of stocks, components like GST inside the TER. There is obviously also a proposed expansion in the overall TER. Now, when you see overall TERs and net income books of AMCs, which let's say operate at 50 or 60 bips, or sometimes a little more, a little less, RTA charges are a small component. They're close to about 5 to 6% of this entire spread. And we believe we sell just enormous value managing all of the liability side operations work for the Indian mutual fund industry. Also, the fact that a telescopic pricing makes our service offering cheaper almost every successive year. So that's the position we are in. We sell enduring value. We sell it at increasingly competitive prices year on year.
Mr. Kumar, both those points are absolutely, and I don't think there's any, you're the market leader by far in the space. So there's no doubt about that, the value that you bring to the table. But at the end of the day, if mutual funds will have to take a hit, this will be passed along downstream. So could you tell us at this stage, and I'm sure that you've discussed this internally, what kind of impact will this have on your business, sir? I mean, if you could give us some numbers, the way to think about this.
We are not looking at this having a meaningful impact on our numbers. So take that as the baseline. We sit in the same arena. So amongst the large participants, both distributors and us, banks, payment gateways, etc., are large service providers. We are sure the mutual funds would like to have a conversation with us, but it could have maybe a 3, 4, 5% impact, but nothing which is completely unforeseen.
3, 4, 5, up to 5% impact in terms of earnings?
In terms of revenue, yeah, absolute revenue.
Absolute revenue, okay.
Okay. Mr. Kumar, good morning. So can you just tell us, what is the outlook in FY24 in the non-MF business? I mean, just trying to understand, I think the share of your non-MF business is expected to increase from 10 to 15% within the next 3 to 5 years. Is that a reasonable estimate? And what could the plan look like in the next 1 to 2 years?
So if you see, we closed last year at 10% contribution from non-MF. We're expecting that to be about 11.5 this year on a static apples to apples basis. The acquisition of Think Analytics adds about 3%. So we're expecting to close this year at 14%. FY24 should close at about 14% non-MF contribution. Now from there, our stated position is this will grow to 20%. So my guess is about 1.5, 2% every successive year in FY25, 26 and 27.
Okay, so from 14%, it will grow about 1.5% every successful year, right? From FY24. FY25, correct. Sorry. Okay.
That's correct. So
got that.
To get to about 20% in FY27.
20% by FY27 from 11% currently in the non-MF business. But what are the segments that you're betting on to reach that level of 20% contribution in the non-MF business itself?
So alternatives, as we've spoken in the past, have grown upwards of 20% last 2 years, should stay there in excess of 20% this year. So that will be one large contributor. Payments. Insurance is doing well, but its success is predicated on this compulsory non-dematerialization coming in a meaningful way. So it'll be predicated on that. And then account aggregator and analytics. So you can think of those five. Obviously, everything will not kind of scale meaningfully every year, but those are the five focus businesses on the non-mutual fund side.
Okay. One final question then, Mr. Kumar. You're sitting on a base of almost 1,000 crores of revenues by the end of FY23. What can you do by the end of FY24? And on a compounded basis, what are we looking at in terms of growth for the business?
So, our business depends upon expansion in mutual fund AUMs. Last year was a muted year. AUMs expanded about 7%. This year, the first 2 months have been very good. What happened in the debt franchise in March, April, May, and some of the SIP flows, etc., my guess is we will close the first quarter at upwards of sequential 5% asset growth. So a double-digit asset growth during the year does look possible. And therefore, I think our best case would be about a 10% revenue growth. Of course, we are going through structural changes in terms of TR resets, etc., for the industry. But I think it is possible to see a double-digit revenue growth during the year.
Okay, all right, Mr. Kumar, thanks so much for stopping by and filling us in with your views. Wishing you all the best for FY24. Well, moving on then, Canfin Homes, that's the next talk on our radar. We have Mr. Suresh Srinivasan Iyer, the Managing Director and Chief Executive Officer of the company, who joins us on the show. Hi, Mr. Iyer, good morning. Thanks so much for joining in. Well, before we get to the outlook on your NIMs, your growth trajectory that you're looking at, some part of the street is a little bit cautious. Will we see a cleanup exercise in the first quarter of this fiscal, or will it be, business as normal? Just in case you want to alert our viewers and your investors as well, that quarter one could be a cleanup exercise, and then we move on from there. Go ahead, sir.
No, I don't think there is anything like a cleanup or anything, because we have the last quarter itself, we had a good result, and the only thing that can come up, even if at all, that is on the restructured book, which also is too early to talk right now, because we just started seeing the book coming out of it. So as such, there is nothing in terms of the credit quality or in terms of this. However, business should start looking up. So that's what we are hoping this quarter.
Okay. So no shocker is likely in the first quarter. We just thought we'll clear the air with regard to that. Let's focus then on your cost of funds. What is it now? Incremental cost of borrowing, what is it? How does it compare with what we have seen in the past? And also, what does it mean in terms of NIMs?
Yeah, our cost of borrowing in the last quarter was 7.5%. And on the liability side, we have seen the entire impact of the rate hike already witnessed, except for a very, very small portion. So the cost of borrowing is not likely to go up going from there onwards. However, with rates starting to come down and some easing in the rates, like in the CP rates and the NCD borrowing rates, and also probably we can see going forward some, on the cost of borrowing, the rates coming down a little bit.
Okay. You said that growth is quite strong and you're expecting, good growth in the year to come as well. Can you quantify that for us? I mean, if you look at your AUM growth, it's been the weakest in the last 6 quarters. It's a growth of just about 5% quarter on quarter, although year on year, there's still almost a 20% growth. Is this 20% year on year growth something that you can maintain? Can you do better than that in FY24?
Yeah. See, in the last year, if you look at it, the third and the fourth quarter, there was a little bit of impact on the demand because of the rate hikes. So because of that, the sequential growth in terms of our disbursements was not as much. Plus, the fourth quarter is always a little aggressive in terms of, portfolio takeovers and VT outs and all. So because of that, on the fourth quarter, and the third and fourth quarter, we had a slight impact because of that. However, with rates stabilizing, we feel that the business will again be back. The demand is, in fact, looking up a little bit already. So we are quite hopeful that we'll be able to maintain this 18-20% in terms of the loan book growth.
Okay, so 18-20% is something that you can maintain in terms of loan book growth. Got that, Mr. Iyer. Your loan mix has been driven by the non-salaried segment for 3 quarters in a row, and this has helped yields, it's helped margins as well. I just want to understand, what will the contribution of the non-salaried segment be in the portfolio by the end of FY24, and how much will that help you in terms of incremental NIMs and yields?
See, presently we are having a salaried book of 73% of our book is salaried, and only 27% of the book is self-employed and professionals. And we are already, looking at a 70-30 and not beyond that. So we'll almost maintain the same mix in terms of the salaried and self-employed portfolio.
Okay, got that. No, just trying to understand, I mean, that mix will be maintained, but will that help you in terms of better yields and better net interest margins as well?
Not really, because if you see the self-employed segment, which earlier had almost 100% margin compared to the salaried segment, that particular differential itself has started coming down. Today, the incremental loans, the self-employed are almost just 0.5% above the salaried segment. So there's not much of a difference in terms of the yield in terms of the self-employed portfolio.
All right, Mr. Iyer, have you seen employee attrition move up, moving to competition? Is there something that you comment on that? And how do you look at retaining your employee base?
See, in terms of attrition, I think it's a little, overstated, because in 21-22, we had a tad below 10% as the attrition. Whereas in 22-23, we had just about 10.3. So it's not, in terms of numbers, it's not a very large increase in the attrition or anything. Plus a figure almost close to 10% is something which is still very, very good compared to the industry and compared to this. Plus, if you look at if I further drill down onto the attrition, most of it has been in the lower levels where, at the entry levels, people come and have a look and then do not stay back, or after a year of probation things, we don't look at it. So it's not a very worrisome kind of a thing in terms of the attrition.
It's more like a Gen Z problem across industries, right? Attrition does not necessarily for your business. I understand that. But okay. Just one final question from my end. Any capital raising that you will be needing to maintain this 18 to 20% AUM loan book growth, and any targeted ROE that you have in mind for the near term?
Yeah, so we presently are having a ROA of about 2.2 and ROE of about 17%. So at an ROA of 2.2, even with a dividend payout and all, and a gearing of 8, so about 17 or thereabout percentage kind of growth is very much possible from the internal accruals itself. However, if rates, growth goes beyond 20% or something like that, if the markets really pick up, we will probably look at something then, whenever the need arises. But about 17-18% thereabouts, it should be possible. Sorry?
Sorry, 17-18%. Got that. Just very quickly, what's the average ticket size of the loan currently, and do you see any increase in that since you spoke about the market picking up as well?
Yeah, so our present average ticket size in the last year was 24-25 lakhs. And there could be a slight improvement. One is because of the inflationary increase in the property costs. And second could be, if we start looking at the kind of branch expansion and everything that we're looking at, plus our focus on the metro and urban towns, there could be a slight increase in the ticket size going forward. So it could not be a very large kind of, we are not going to change the segment or anything, but there will be some increase in the ticket size, which is a natural kind of a thing.
All right, got that. Thanks a lot, Mr. Iyer, for joining in and speaking to us. That's Canfin Homes, been one of the strongest stocks lately in the last 3 months. The stock has gone up about 30% or so, and the management is bullish of an 18 to 20% growth. But let's do one thing. Volume-led growth will return for HUL from the second half of FY23. That's not me. That's the word coming in from HUL's CFO Ritesh Tiwari in an exclusive conversation with my colleague Shilpa Rani-Peta. Ritesh also says that further price cuts for soaps, detergents and shampoos are set to hit the market. Listen in.
For FMCG business overall market, long period, look at last 5 years, 10 years, 20 years, growth typically comes 2/3 from volume and 1/3 from price.
Yeah.
Given the amount of inflation that we had seen for last 1.5 to 2 years time, growth has been led by pricing. What will change going forward as commodities are tapering off? We are seeing sequential declines as well in many large commodities. Price will taper off, and going forward, the growth will be volume-led. Within that, if I tease out urban and rural, within the flat volume, urban is growing by 3%, rural is still declining by 3%. But the way we see this point in time, that the entire slowdown that the FMCG had seen, especially in volume, that is bottoming out. Rural has also substantially recovered compared to what it was at a very high single-digit volume decline at one point in time. It's at 3%. If I look at Hindustan Unilever, last 2 years we've seen 30% inflation. In a bucket of 2 years, that's completely unprecedented.
Yeah.
Now, this inflation is not going further. In fact, we are seeing some sequential coming off of few commodities. So the way we see going forward, the balance, as I mentioned earlier, we will start moving to a period where growth will be volume-led. Now, I don't see this point in time price getting in mix in terms of adding to the total growth. In our view, typically volume recoveries will take some time, but growth will still be volume-led for next few quarters going forward.
So you're saying next quarter onwards, we can see volume-led growth already?
Of course, there'll be a balance for one more quarter, June quarter, but definitely as we move forward towards later part of the financial year, it will definitely be a volume-led business that will happen. It will take a quarter or two for it to further stabilize from the peak of 7% that we've seen in the recent period, but you will see that price growth tapering off.
Right.
So yes, in next couple of quarters, you will see volume leading price in terms of total growth composition.
So second half of this fiscal year?
Indeed. Second half of this financial year, you would expect growth to be volume-led.
Right, great. And, in terms of rural also, we're seeing some recovery. The rural slowdown has bottomed out. That's what even Nielsen's data is also suggesting. But, we've had a heat wave, we've had unseasonal rains, we've seen that impact on farmers. I mean, how do you then see the rural growth panning out in the next couple of quarters? Do you think it's going to continue remaining under pressure?
From here onwards, few variables very important to see. What will now start triggering better version of growth in rural areas. Monsoon, to your point, is absolutely very important element. So I guess we got to see how El Nino, the quality of rainfall, the quantity of rainfall, and the resilience of the rural infrastructure that we have in agriculture all play out, and we will hence have a little better read in few months' time.
Want to talk a little bit about inflation and related to that. Now, with inflation cooling off, last quarter we've seen some grammage increases and price cuts that have been taken. Is it safe to say that price increases are behind us, and will we see more benefits of inflation and the commodity prices cooling off being passed on to consumers?
At an aggregate level, answer is absolutely yes. Now, there's a meaningful correction which has happened in skin cleansing and in laundry in terms of commodity, and which is why in these categories we have taken price cuts. Equally, in many places we have done volume increase, either giving a soap free with a bundle of soap, or adding more grammage to an existing soap, or for that matter, adding more powder to a pouch of laundry. So that has happened. In terms of hair, when you look at bottles, hair bottle prices have been intervened. We have decreased prices. The net price the consumer pays for buying a shampoo bottle, we have intervened in that space. So consumers have seen benefit and advantage. As I mentioned, it's always a trade pipeline, but they have seen advantage benefit coming in. There are very few elements of the portfolio where we have done price increases. That is limited, I would say, to a portfolio called HFD, by and large, health food drinks, where milk prices, cereal, barley, those materials, soft commodities as I call them, agri materials, we have seen prices of those commodities going up. And hence we have taken price increases in that.
Are you looking at passing on more? Can we expect more price cuts going forward?
It's a large part of price cut, I would say, we have started invoicing, we have put in the market, but as I mentioned, it's always a trade pipeline. By the time consumers experience that, it takes few more months.
Correct.
So we have done large part of the price decreases because commodities have come off, but consumers should take, in my view, a few more months for them to fully experience the price cuts that we have done.
And on the same lines, talk about margins. What's the margin expansion outlook also looking like? Now, is it safe to say that the worst of margins is behind us? And in that sense, what's your outlook on operating margins going ahead, and also for gross margins? Do you think we'll reach the 50% plus levels in the next 2 to 3 quarters?
At this point in time, the focus remains on gross margin. If I talk about Hindustan Unilever, in last couple of years' time, given the high amount of inflation in last 2-3 years' time, we have dropped 600 BPS off of a gross margin. This 600 BPS gross margin got dropped because of the point I mentioned earlier. Cumulatively, last 2 years, 30% inflation in commodity cost. Against that, we took 18% price. So 12% price versus cost gap. That had a tell on our gross margin. Now, good news is, with a good job done continuously in the business on savings, driving savings across all the lines of the P&L, and commodities coming off. In the last quarter that we declared results, we had 9% net material inflation, we had 7% pricing. So a more than 1,000 BPS of price versus cost gap came down to 200 BPS of cost versus price gap. Our own gross margin, which had taken us 600 BPS hurt, has improved in last 2 quarters by 300 BPS. So almost half of the total margin decline that we had seen has come back, 300 BPS. further, of course, job to be done in gross margin. Our margin where we are today, even if I look at last few quarters, more than 23%, we do believe it's a very healthy set of margin.
Okay.
And at this point in time, the focus will be volume growth, the focus will be gross margin, focus will be maintaining competitive price value equation, and focus will be investing in advertising, sales, promotion.
Right, but I'm still trying to understand like a rough timeline. If we were to look at, while I understand the current, you feel like the current levels are healthy, the 50% plus, do you think it's achievable given the trends that we're seeing currently?
50% meaning the gross margin?
Yeah, at the gross margin.
At the gross margin level.
Yeah.
Absolutely, yes.
In the next 2 to 3 quarters?
No, that how much quarter it takes is a point of conversation.
Okay.
Remember, when you end up doing price correction, that impacts the line of gross margin. And hence the price value equation for next few quarters, it will remain volatile across commodity categories.
I want to talk about M&A also. We've seen significant, and you did talk about one category that was very important in terms of the healthy snacks and the nutrition department where you had Oziva and these acquisitions. Going forward, are you looking at more in this space itself? Are you looking at other spaces? I just want to get an idea on, what's the M&A pipeline for you looking like?
There are some fabulous brands we have in the global stable of Unilever, and as they become relevant for consumption in the country, we'll bring them.
Right.
The spaces in which we want to operate, health and well-being, is a space where it comes on gut health, it comes on overall inner beauty, it comes on protein. Those are the spaces that we want to operate in vitamin mineral supplement space in health and well-being. Equally, when I look at beauty and personal care overall and beauty space, again, where we do see a space of masstige price point, and that's a space within beauty which today is getting more excitement. And masstige is something which is more than premium. So when I talk premium, is 120 plus price index, but masstige starts 250 plus, for example. Yeah. And in that segment of the market, though it is niche and small today, we do see market basically growing very well in that space. And which is why then we launched 5 different brands in that space. But equally, there's a fabulous brand externally, which we think adds and can do a good job with our portfolio. We're always open for bolt-on acquisitions as well.
Okay, that's the word coming in from HUL. Let's slip into a quick break. On the other side of the break, Shrikant Chauhan will join in for some technical trades and give us an update on the market picture. Do stay tuned in for that.
Okay, welcome back. We got 85 points on the Nifty. 18,618 is where we are at. Market breadth is 3:1. Very strong broader market action. Just a few stocks I want to highlight before I get in Srikanth, who's with us with his calls for 10 a.m. Tata Chemicals will come up on your screen. Stocks up 4.5%. And this is looking very strong with large volumes. Tata Chemicals. So 1,013, 1,014 on that one. Olectra is right there. HBL Power is up 7%. HBL Power is one of the companies which makes anti-collision devices for railways. The stock is up on very strong volumes. Rosari Biotech is up 6.5%. You got, I was talking about these defense companies, right? MTAR Tech is another one, which is up 5%. Datamatics is up 7%. Piramal Pharma, so it saw signs of life the week before last. Last week was flat. Piramal Pharma starting this week with 5.5% in gains. And I can go down Talbros Auto, Indocount, Greaves Cotton, etc. These are the names which are looking, Marksons Pharma, which are looking up and up. Srikanth Chauhan is with us, back with us of Kotak. Srikanth, good to have you back. Your calls now at 10 this morning and stock-specific trades as well.
Yeah, Prashant. I think today, almost all the indices are doing well. And surprisingly, Bank Nifty is doing fairly well as compared to Nifty. It is sustaining above the mark of 44,200, which was not at all expected, but it is holding about the same. But I'm of the view that till the markets are not crossing 18,670, which was the highest of the previous week, and 44,500 for the Bank Nifty, I think till then we need to be more and more stock specific. Yes, cement stocks or maybe defense stocks are doing well. In that, we like Hindustan Aeronautics because it has broken the highest point of the MSCI rebalancing day. So based on that, we are expecting stock to move towards 3,500 or 3,550. Currently, it is around 3,270. So it's a buy at current levels with a stop loss around 3,190, just below the levels of 3,200. And almost all the power stocks, they are in fact participating in the up move. And whenever there is a rally in the market, we see some specific buying interest in almost all the power companies. And Prashant, if you go through with the PFC, REC, they are trading into all-time highs if we compare them on the closing basis or on line charts. So based on that, I'm of the view that all these power stocks also should do well in the near term and in the medium term. But in that space, we like Bharat Heavy Electricals, which is currently trading around some 84, 85. There we are specifically bullish and we are expecting stock to move towards 91, 92. At current level, it's a buy with a stop loss close to 81.
All right, thanks a lot for that, Srikanth. Have a great day. Appreciate your thoughts here on CNBC TV18. So that is Kotak Securities with their view on the markets. Let's get a quick handle on what's happening in the commodity space now. Manisha Gupta is joining in. Manisha, what's the one commodity that you're looking at today?
Not moving away from crude oil prices because there's just so much happening there. And we have seen a knee-jerk reaction come in for those prices. We did see $79 a barrel for the Brent prices as soon as the OPEC meeting got over. It took 7 hours for the OPEC meeting to come to many decisions that we are working with right now, especially Saudi Arabia, which has pledged additional cuts going forward. So at this point in time, we are looking at 500,000 barrels per day of an extended voluntary cuts to the end of 2024. Add to that the fact that the Saudi Arabia also says that they're going to cut an additional 1 million barrels per day in the month of July alone. And whether or not the market needs it, accordingly, they might extend these output cuts as well. We did see 79 in the markets there, and there has been some profit taking since those kind of levels. So Saudi Arabia, with those kind of cuts, will now see an output of 9 million barrels per day. This was 10 million barrels per day in the month of May, but July clearly is a month that is going to look at lesser supplies going forward in the international markets there. OPEC overall produces, OPEC plus that is, produces 40% of the world's crude output right now. And we are looking at output set to be at around, the cut was 2 million barrels per day in the month of October. Then we saw 1.66 in the month of April. And as of now, 3.66 million barrels per day of a cut is what OPEC plus is going through. This is nearly 3.5 or 3.6% of the global demand there. And we are seeing that go off the markets there. 1.4 million barrels per day of a cut is what OPEC and allies have suggested from the 1st 1st of Jan 2024. So that in total will bring OPEC and allies at 40.46 million barrels per day of an output in 2024, starting in the month of January. So the cuts continue in this year, and you are looking at more cuts going forward as well. But what the markets are watching is the OPEC and allies have lowered the targets for Russia, Nigeria and Angola. That means that these countries can continue to produce higher. UAE actually has seen higher output cuts, a higher output going forward. So 200,000 barrels per day has been hiked. So 3.2 million barrels per day is what UAE will produce going forward from the month of July there. So what Saudi Arabia is cutting, the other countries actually are increasing, is the reason you saw the prices come off those 79 of highs that we saw in the markets yesterday itself. Well, there is also an estimate that you could be looking at a deficit in the month of July with the higher cuts that Saudi Arabia is coming in with. So 3 million barrels per day of a deficit is what Rystad Energy, UBS and IEA seem to be predicting right now for the month of July, and that has been supportive. Goldman Sachs also says that if these cuts continue, then the crude oil prices could increase $1 to $6 from where they are right now by the end of this year. The other thing that has been supporting crude prices is the US production, where we have seen the operational rigs now decline by 15 in the previous week, and this is the lowest number that you are seeing since April 2022. Various factors there which are supportive for crude prices at current levels.
Right, Manisha, thanks very much for that. You will keep an eye, lots of estimates there with regards to what this would mean for oil prices. Nava is the stock we want to take stock of. I mean, it's in metals, manufacturing, etc. Power, mining, 8.5% higher. Stocks at about 267. I think there is some relief the company's got. Vivek is here to tell us more. Vivek.
Well, that's right. So Nava, erstwhile Navbharat Ventures has gone ahead and shared an operational update as far as its Zambian subsidiary is concerned. Remember, the Zambian subsidiary up till December 2022 was a drag and was seen as a significant overhang. Now, post the relief that the company got in the court against Zesco, which is the Zambian distribution company, the Nava has gone ahead and seen significant operational turnaround. So what today's update is that the company has said that the Zambian subsidiary MCL has gone ahead and discharged all of the overdue loan installments that was due to the company, and the overdue liabilities now have reduced significantly. It's now at around $206 million versus almost $483 million in December 2022. Also, they have now started servicing all of their debt regularly since March 2023. The company has also given an update as far as the overdue payments from Zesco is concerned. Zesco, out of the total 518 million that Zesco has to give the company, they've gone ahead and already effected payments of $181 million. So significant positive news flow as far as Nava is concerned.
Okay, Vivek, thanks a lot for that. So positive news flow as far as Nava is concerned. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Santanu Sengupta of Goldman Sachs ahead of the RBI Policy Committee meeting on the 8th of June. Stay tuned.